Hello traders, Gary Wagner here. It is approximately 11:15 in Honolulu, 5:15 in New York City. It is Monday, the 23rd day of April, and this is the daily report for gold and silver. Continuation of lower prices, although we do have gold trading well off the lows, silver trading kind of close to the lows. Currently, we do have gold down about $4 on the day, as you can see. Current print is 1636.81. It has been ranging on the low side. It hit was 1624.30 and the high 1644.40. Silver off about 84 cents. It's down about 2.65% today. 3046 is the low and 3182 is the high on the day. You know, traders, we have an interesting scenario that has been in the markets of recent. We did have concern over the weekend and into the beginning of this week about the European Union's sovereign debt crisis. Now, gold today is acting as a risk-off investment rather than a safe haven investment, and therefore we saw lower prices. When you consider that this recent switch has only been predominant in the marketplace for a little while, say over the last year at the most, I find that quite interesting. On a technical basis, what we are noticing is I have two triangle corrections, a short and a long, and this is a 440-minute chart. As you can see, this is coming off the lows, and this down here, traders, is a mistick or a misprint. But as you can see, it has come to the bottom of the line and appears to have closed above that, but is staying within the parameters. Now, what I am finding interesting, especially on this shorter term chart, is we are very quickly approaching the apex of this particular triangle right in here. Now, traders, you can see how this triangle is greatly different from the one above it, this being a 770-minute chart, meaning 2 candles per day, this approximately 4. But as you can see, it is this sloping downward resistance line that I have accelerated, this one right in here, which would be right there. And you can see it from that vantage point. We are no doubt quickly coming to the apex of that triangle. However, in the broader stroke, in the broader market, let me go ahead and blow that up for us. As you can see here, it really came to the bottom of this support area, this support line. You can see that the lows were just below that. You can see that right in here. But it does seem as though, at least on a temporary basis, it has held support. Now, I don't mind it wavering a little bit below this line, but any kind of a solid breakdown is, to me, going to be a different ball game, because at that point, this triangle correction we're looking at doesn't seem as valid. But for right now, it certainly does. And here's what we're looking at. This market came up, it found resistance very quickly right in this area. These tops that are around 1680, right around here, you can see them here. Now, we have had, though, a progression of lower highs and higher lows. So we're still maintaining within this compression triangle. And so my sentiment is, if we can hold support in this area, on a technical basis at least, we should see a spark or a clip back up as it makes its way towards the resistance area of this corrective triangle. That would complete the fourth leg. We would get one final leg down, the fifth leg here, and then, of course, our final thrust would carry us and, according to Elliott wave theory, would break through this resistance area and break out to new higher pricing. Now, traders, silver was under much more defined pressure today than gold, I believe down about 2.5%. This is a daily chart. It is in Japanese average format, Heikin Ashi. I've got a simple Fibonacci retracement. That retracement begins at around $26, the low that we had back at the end of 2011. This large rally, which takes the market to about 37.60, and the 61% retracement is 30.54, and that's why, as you know, I have recommended placing stops below this point. That's at 61% level, and that's where it came from. Daily chart, no sign of any kind of support being found yet. Of course, on a Heikin Ashi, they always lag, so even if we found support and the market moved up, it would take a day for this particular type of chart to kind of catch up to that. I'm still looking at support and resistance areas in silver to be pretty much the same, and this is the defined range that I'm looking at. In terms of where we should find support, well, traders, we're dead on. We're right here. As you can see, these lows and current ticks are matching it. I see resistance, and I'm picking them off of these two tops here, this bottom here, and this entire band of support right in here. And that's why I believe that in terms of a range, this is the range that we're looking at in silver from our highs to our lows. My personal sentiment is right now we should be near the lows of this marketplace itself, and we should take a stab or a move back up to the upper end of the range. We'll have to see. We have the FOMC meeting that's coming up this week. It's begun, I believe, and they will report to the Congress on Wednesday, or Ben Bernanke will. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.